Hello, this is Bob Lucas. I'm an analyst with Bitcoin Live, and today I'm going to be presenting a very interesting and exciting update on the 4-year Bitcoin cycle. And I think this is a video that you're going to really want to pay attention to because the current action and sell-off in the Bitcoin markets really is something that is quite normal for this point in the cycle, and one that really does present an amazing opportunity for those who have the foresight to look at it from the correct lens. So this will be about a 10-minute video going over the Bitcoin cycle, some of the history, some of how cycles work, and then a look into the future, into what some of the possibilities will be. So firstly, a little bit on me. I'm a 25-year veteran of trading. Past 10 years, my main focus has been on the study of cycles. I study cycles in many asset classes, such as obviously the equity markets, gold, silver, crude oil, the US dollar, and more recently Bitcoin and crypto. I find that Bitcoin is actually a perfect asset class for cycle analysis. Cycles are pretty much a reflection of price over time, as is represented by the collective sentiment of the ecosystem of an asset. And I find Bitcoin, because it is so universal, so global, with so many different avenues for exchange, that I find price discovery to be more natural and more reflective of kind of the the raw participation of the asset class, as opposed to something that's possibly more regulated and manipulated in more traditional markets. So I find cycles in Bitcoin work really well, and I'm going to show you some of those. So just real quick, a cycle is a measurement of time from one low to another low. So we measure a price low over a given period of time, and today I'm going to go over a 4-year cycle. But within the 4-year cycle, you'll find 1-year cycles that are intertwined in that, and then you'll find what I call a daily cycle. And you may have seen on Twitter and other avenues where I've posted charts on the daily cycle. That's a cycle that's over a 60-day period, so that one's a faster cycle. But the shorter cycles are intertwined with the longer cycles, all the way out to a 4-year cycle. Now, going back to kind of the early days of Bitcoin, going back to 2011, obviously you have stories of the first kind of transactions that were occurring more like a barter exchange for Bitcoin. The most famous one, of course, being the pizza transaction that's now the equivalent of hundreds of millions of dollars. I find that time and price discovery sort of before that point is a little bit irrelevant to cycles. There really wasn't enough participation. The asset class just was not well developed enough at that point. But around the 2011 point, when Mt. Gox and a couple of other smaller exchanges came to existence, and Bitcoin's sort of price discovery around about the 60-cent mark really came about, I find that that's kind of the point where cycles really begin, at least the measurement of cycles, and real price discovery begins in Bitcoin. So my first mark on this chart, you will notice, is around the mid-2011 time frame. I don't have all the price data for that. I couldn't marry it with the Mt. Gox data, but this is essentially a 60-cent area below this point, up to a $11 range here, $12 range, and we had the first real big crash back to sort of $2 or $3, and then we continued higher. Essentially what this is telling us here, what I'm showing you here, is a 4-year cycle. 4 years, of course, being 208 weeks. And what I'm showing you here is that the first big 4-year cycle for Bitcoin was a big bull cycle. We had a move, primarily a bull trend, of going up for 142 weeks to a top. So 142 weeks represented 70% of the 4-year cycle in time going up. From there, we had a period of 59 weeks of a bear market. So we had obviously kind of a blow off top towards the end. We saw a $1,000 or 10 times increase in price over just the last sort of 7 weeks. And then we had really what started off as a mild bear market. I mean, it was 50% retracement, but from where it came from, it wasn't necessarily all that bad. And then ended, of course, towards the end in more of a capitulation, more of a big sell-off. And you see that in representation in the volume that we had at that capitulation point at week 201. So this essentially is a 4-year period, a 4-year cycle of Bitcoin. This was the first real big market or cycle in Bitcoin that occurred. And then what happened was we went into the second 4-year cycle for Bitcoin. Now, don't be confused. These are not necessarily related to the halving schedules that we have in Bitcoin, although I'm sure there's a decent amount of correlation to some extent. But just going in now and looking here, I'm going to zoom out a little bit and start to bring into focus the next 4-year cycle, which we just went through. So now what you see here is a second 4-year cycle begin around the January timeframe with that capitulation drop down to the $150 area. That started what was first really just a flat accumulation phase with Bitcoin. This really is associated with, many people associate this flat period with the prior bear market. Technically, it is part of a new 4-year cycle, but like any new 4-year cycle, there is a period of, it's still what you call despair, hopelessness, and sideways price action. But really underneath all of this is accumulation going on. There's not a lot of selling. There's actually smart money accumulation occurring. And then you get to a point, a couple of daily cycles, maybe 4 to 6 months out, where you really start to get some recognition here. And you see it represented in this volume here. This is when now the spring of the 4-year cycle begins. This is where it starts to take off, and now it starts to accelerate. And you can kind of see that back in the first 4-year cycle. You had this huge drop back to $2. You had a somewhat of a rally. Then you had this accumulation phase. Then you had kind of the spring, and you see the first real sign of volume there. And from there it was off to the market and off to the races, I should say, and all the way higher. And you see the same thing occur here. This is a more pronounced or more steady sort of bull market run. The 26-week moving average, which is a 6-month moving average, shows you as price crossed back over the 26-week moving average that the bull market was on, and it pretty much held that run, that 26-week moving average, all the way up to the top. Now, what you see here in this 4-year cycle compared to the past 4-year cycle is that you had this similar 3/4 of the 4-year cycle of moving higher in the bull phase. We call this right translation in cycles, meaning that the cycle from this low to the next low is right translated, meaning the midpoint of the cycle occurs well past, the top of the cycle occurs well past the midpoint. And in this case, we had a top at week 152, which is almost 3 years, of course. 3 years would have been 156 weeks. So just shy of 3 years from the last low here, we had a market top. Similar to the last one, you have a separation between sort of the longer 26-week moving average and price. That was a giveaway. Obviously, the Bollinger Bands, if they were in here, you'd see the weekly bars pull out and outside of the Bollinger Bands. And then what we have now currently is a 50-week decline, very similar to the 59-week decline we saw back in the prior 4-year cycle decline. Now, I'm not necessarily calling for an end to this bear market right here, right now, but we are at week 202, which is very similar to the 201-week cycle low that we had back in 2015. Now, as you recall, 4 years of cycles is 208 weeks. So there is a possibility here that we're going to see a kind of a low form, and then we have what we call another daily cycle. Daily cycle is 2 months or 60 trading days, and 60 trading days is roughly 8 weeks. So there is an outside possibility now that we're looking at a relief rally that plays out, that we rally a little higher, sort of back almost to support, and then you come back down, and then looking at a February low at around about the 29, 25. It's really no way of knowing with price, but from a time perspective, looking at a February low and then moving higher. So just before I move into kind of the next phase, it's just important here to understand as we look at price and we look at this 83% decline from the top, and we look at this more recent 50% decline from the $6,300 level, or we see the massive $2,000 drop. that this is not a time to be panicking. The panicking should have come earlier. The selling should have come much earlier. The profit taking obviously should have come well and truly when sort of that parabola had broken and come all the way back down. Now is not the time to look back and say what if. Okay, if you didn't sell out, now is not the time to sell. Now is the time to hold. Now is the time to accumulate. Now is the time to add more to your long-term stash. But what's more important than anything else is to understand that how these cycles do move in this ebb and flow fashion. We get this 3-year move up, 1 year move down, 3-year move up, 1 year move down. Now that's the case because this is a new technology that's revolutionary, and we are going to see probably at least one more of these 4-year cycles move higher before we have any real threat of what we call a left translated 4-year cycle, where it tops earlier and declines for a number of years. So if that's the case, then what I want to do is kind of zoom out a little bit and let you know that if you panic sell right now, you're going to regret that for a very long time. People who sold out right at the end here, they held on. They regretted that because they never will be able to get back in. They saw the market move 50% from the lows, even 100% off the lows very rapidly, and then seeing price 100% higher from the lows from where they sold out never allowed them the opportunity, at least in their mind, to get back in and establish a position. And that was unfortunate because many of those people also came back in later on in the cycle when it was well and truly in the advanced stage of a bull market trend, and got in because they just couldn't take missing out on future gains and everybody talking about how much money they had made. I'm going to zoom out now and just give you an idea of what we're looking at potentially in the future here. So again, let's go in and get some drawing tools here. I want to show you, first of all, I want to draw out from this low. I want to go out, let's go 150 weeks. Okay, because that's kind of 145, let's just leave it at that. I'm going to take 145 weeks. I'm going to take my blue bar and draw it out there, and then I'm going to take kind of the same tool and I'm going to draw that out for 55 weeks, and that's going to represent the bear phase. Okay, in total that should be around about 200 weeks or 210 weeks if I've done that correctly. So I'll just take this just to confirm. Alright, there's 200 bars, 199. Okay, so that's close enough. That's going to certainly serve its purpose. I'm going to unlock the auto. I'm going to kind of try and bring this out and give you an idea now that if we're looking at a repeat here in the coming weeks, either starting from a low this week or a low in February, I think at this point, when you look at the grand scheme of things here, it's kind of irrelevant. But now what we're looking at here is, first of all, another kind of winter period, right? So we rally back up, but then it kind of chops sideways for probably half of the year, come back up, and then it'll start to break out of that range. And this is where it starts to build back up and build the base up here to test the $20,000 level, and then I would think chop sideways again for a little bit of time there before it begins to then come out and gain a lot more attention and a lot more of a leveraged speculative bid at this point. So from this point, it's kind of a stealth move. Certainly, at least the base around the $5,000 to $7,000 area, knocking up against all this. What was support would be now resistance. Once it breaks through that, it's not going to have much attention. People have already moved on. ICOs have, for the most part, either run out of funds, dried out, capitulated, sold off. The really successful projects will remain, but in general, this is a cleansing. This is the cleansing period of kind of the bear market or early bull market. This is accumulation phase for new institutions or the savvy investors. And then when we start breaking out and it starts to regain some of that price between 7,000 and 20,000, you're going to start to get more and more interest, more media attention again, until back to this $20,000 level. Now, if you look at past charts, if you look at this sort of move here and then this move, that's the equivalent phase. Once it starts to get back up to the old highs, that's when it begins to accelerate. And this is when it begins to sort of go parabolic. Let me see if I can move my chart higher now. I'm going to bring this up into this area here. Okay. Going to reconnect. So this is kind of, and obviously price, it's somewhat arbitrary at this point. I can really stop it at 80,000. I can go up to where 300,000. I'm not trying to predict a price point in the future. What I'm trying to tell you is that from a time-based approach, we most likely will see another right translated 4-year cycle that's going to move up and kind of get up into this point here. I would say around about the $100,000 to $200,000 range. Why is that? Because at that point, we're looking at, from the breakout point of the prior bull market, it's a 10x extension. So kind of, $18,000, $20,000 level, a 10x extension gets you to $200,000. We had similar from this $1,300 level. We had almost a 20x extension. It was like a 15x extension, and we had similar extensions in the past from bull markets. So getting up into the $100,000 to $200,000 range is probably not unrealistic. Just a point on that, let's talk market cap. At $56,000, Bitcoin becomes a 1 trillion market cap. At over 110,000 becomes 2 trillion. That's a significant amount, but of course, in relation to gold, at 8 trillion, it's still only 20% or 25% of that number. And today, when you look at Bitcoin's market cap at $70 to $80 billion, it is really a drop in the ocean. Consider that some of the sort of mid-tier S&P companies have market caps in the $50 and $70 billion range. We're talking about just one company in the S&P based in the US that's not even in the top sort of 30 or 40 has the market cap of Bitcoin. I think once you start to really wrap your head around that, you realize that we've all been focused on a nominal Bitcoin price for too long, and that has clouded the fact that Bitcoin is still grossly undervalued for the future potential that it provides. And that's also because there's been a lot of media attention on these sort of speculative 4-year bubbles that we see, and the fact that we have a high sticker price of sort of 18, 20,000. But also what we need to realize is that Bitcoin has been priced since inception. And what other technology has been priced since inception? If you look at the discovery of electricity and light, for example, those discoveries were made in laboratories, and it took 10, 15 years to commercialize many of these technologies, the automobile and energy, for example. And even more recently, the internet is probably a better example. The internet's origins really start in the 60s. You've got the government, ARPANET, and you've got protocols like TCP/IP in the 70s, for example. So it's not until more like into the late 80s, or obviously the 90s, when you've got HTTP and www come out, that you really start to commercialize and have the ability to price that technology in the form of the .coms. But those are 20 years removed from the underlying protocol, the underlying technology. With Bitcoin, because it is a monetary system as well as a technology and a protocol, you have a situation where it was able to be priced almost instantly. Within 6 months, you had barter. With Bitcoin, there was some level of price discovery, but then of course there were exchanges that were up within months or 12 months from the initial Genesis block, and that afforded the ability to provide a means for discovering price much earlier, decades in some cases, but obviously years, much earlier than other traditional technologies, or even a private company, for example. You go to a traditional startup, and they get some private placement or some angel funding. There really isn't a public price discovery mechanism until you really get into the secondary markets, and obviously then into stock exchanges or an IPO listing, where you start to price a company that may be 10 years old. So just be aware that all of this sort of price action from a arbitrary number, nominal standpoint, is irrelevant. Bitcoin's value at 70 billion is absolutely undervalued at this point, and you have to realize that it's just going to take wave of 4-year cycles like this until we get to a level which is somewhat representative of a fair value for this network and what it costs. And I think that doesn't really come in until the next 4-year cycle. I don't know when we top. We may top sooner than 150 weeks. This may be something like like a 100-week top, and then the bear market that follows that is sort of longer than 50 weeks. I think, again, that's kind of irrelevant. What you're looking for is an explosion above the $20,000 level. You're looking for a 5 to 10x from that point. That puts it at 100 to 200, maybe even $250,000 for the next wave. From there, then you begin the third bear market cycle of the third 4-year cycle from that point. So we can just draw something in like that, where we then get the same type of sell-off, get that hope rally, and then we come back down. Sorry, I'm drawing that too quickly. And then come back down, and then we retrace another 85% of the move from the $20,000 area. So you can come all the way back to, say, $30,000 by the week 210 around the 4-year cycle low area, and then you begin the process again. That is a ebb and flow depiction of how cycles work over time, and how sentiment on a longer time frame and a longer scale really occurs in this sort of manner. But overall, if you draw sort of your trend line through that, it's consistently moving higher, reflecting the adoption and the advancement in the technology and advancement in crypto currency in general. So I hope you enjoyed this video. This is kind of the content that I provide on Bitcoin Live on a continuous basis. Mostly I'm focused on the daily cycle, which is a 60-day revolving ebb and flow cycle. So you look at this 4-year cycle and you're seeing this up and down sort of flow, then think of that in a 60-day time frame. And my trade alerts, my trade analysis with Bitcoin Live does primarily focus on that 60-day cycle. But what's important is that the 60-day cycle is significantly influenced by where we stand in this 4-year cycle. So when last year in 2017, when we were in this bull market trend, all these 60-day cycles were right translated, and they were peaking very late, and they were falling right towards the end for a week or two, and then moving higher. So the bias then was obviously to be long, to be more aggressive, to be more leveraged during these 60-day cycle lows, and to get out near the top of each of these 60-day cycle highs. And that was something I repeated all the way to the top. And then pretty much from the first cycle that broke and that failed, I've been warning members to be either hedging, to be either out, or to be shorting. And I shorted pretty much the entire move down. And what you see in reverse in a bear market going down is that cycles, the 60-day cycle, they move rapidly early in the cycle, but they top out very quickly. So in the downtrend, so this cycle, the 4-year cycle, tells me and helps me understand how the shorter time frame cycle was more likely to perform. And what we see in this sort of bear market downtrend is that they rally fast, they top very early within, say, 10 or 15 days or 20 days. And those are the rips that you want to short in a bear market. In the bull market trend, you want to buy the dips, because the dips are short, they're fast, but they reverse quickly. So you're buying the dips in the blue bar going up, and you're selling the rips or the rallies in a bear market trend. So that's kind of the analysis again that I provide there. I hope you enjoyed this video. The main takeaway here is to understand where we sit right now in this entire process. We are right here. Again, just want to finish off the video with this note. We are right here. If we're not at the low, we'll be at the low in February. I don't make guarantees, but I'm very comfortable and confident saying that we are very close to a significant point in Bitcoin's evolution where you don't want to be looking for exits and panic. You want to be looking at opportunity. Smart buyers get in at the sort of awareness and accumulation phase of a bull market. Dumb money and retail gets in at the end of a move. Smart money sells at the top of a move, and dumb money sells at the bottom of a move. You have to decide who you want to be. If you made that mistake, like many of you did on the last move, where you got in late, or you just held all the way through, or you just sold a lot of it in this area, or you just sold some very recently, that's fine. Learn from your mistake, learn from this prior cycle, and let the next cycle be your opportunity to really make a difference in your financial future. Again, I hope you enjoyed this video. Be well, and I'll come out with some more public content in the near future. Thank you.